today the cues that we're picking up from the Asian markets this morning and how they've opened up don't seem to be that exciting. Taiwan index, that's down 0.3%. Hang Seng, that's too down 0.3% as well. Nikkei is trading in the red. We have ASX 200, that's Australian index, that's trading in the red as well. So a bit of a dull morning that's coming in from the Asian market front, and this is coming after the US Fed rate decision that came in. They're keeping the rates at a hold, unchanged. So that is what we'll watch out for. Though we've seen a bit of an uptick coming in on the commodities front like gold, but Asian markets today are largely trading lower, even Kospi's trading with cuts of around 0.5%. So let's look at what the Indian market is indicating now for us. Indian market is also indicating a red start today. We're watching out for a 83-point decline at open, so let's keep an eye out on that one. But today, at least what we're seeing, Asian markets opened in the red, implied open indicating an 83-point downtick for the Indian markets this morning. But that's the Asian market impact. We have a lot of overnight cues that have come in as well. How is all this going to be impacting our Indian markets today? We have a team of research, as always, joining us to set you up for trade, tell you which are the important stocks to watch out for as well. First up, Gaurav, what are the important cues that we're keeping an eye out on today?
Well, as if we look at Nifty, yesterday we saw Nifty gaining in trade for the second consecutive day. Nifty ended above 25,340 level mark. And now what is key level to watch out for is that the option data suggests there is a support building up at 24,300 as well. And at the same time on the upside, 25,500 is a key level of resistance. Apart from that, there is actually a positive cue because as per our exclusive sources, India has made a significant progress in a trade deal with USA. And sources also say that we are close to seeing the trade deal with the USA happening. So that is something, a positive cue for Nifty definitely, and that is something that we will be watching out for today. Other than that, yesterday we saw sector-wise, Nifty Energy actually showed up a sharp gain of around 4%, with oil, CG Power, ONGC, GAIL, BHAL actually gaining more than 4 to 5% in a trade. And at the same time, Nifty Metals were also up, with Hindustan Copper actually gaining more than 13%. So these are the key stocks that we will be watching out for. And the flip side, we saw Nifty FMCG, which declined almost by 0.7%, with Tata Consumers and Britannia being a key dragger. Remember, today we also have results coming up from the FMCG space in the likes of Dabur and ITC. So this is a space that we will be watching out for, and this can also keep some anchor on Nifty as well. Other than that, BEL, ONGC, Coal India, Hindalco, these will be a few stocks which will be on our radar today, because yesterday we saw these stocks actually hitting the 52-week high level. Lastly, let's also not forget about the impact which will be happening from the overnight earnings as well as the earnings which are likely to come today.
Okay, thank you so much for that, Gaurav. But let's go across to Ria, who is here to tell us which are the important stocks that we should be keeping on our radar. Good morning, Ria.
Well, good morning. Let's start off with M&M Financial first, reporting its Q3 numbers. Net profit has come in at 810 crores, well above the estimates that we were working with. Net interest income, although, has come in at 2,304 crores, slightly below the estimates of 2,425 crores. For L&T, the revenue has come in at 71,449 crores, slightly below estimates. Margins, however, have come in at 10.4%, above the estimate of 9.95%. For Garden Reach, the revenue has seen an increase of roughly 49% on a year-on-year basis. Margins have also seen a very healthy expansion at 9% versus almost 6% in Q3 of last year. For Cochin Shipyard, the revenue has seen an increase of roughly 18% on a year-on-year basis. Margins have contracted heavily at roughly 14% versus 21% in Q3 of last year. For Gland Pharma, the net profit has come in at 261 odd crores, above estimates of 253 crores. Revenue has also been above estimates at 1,695 crores. For GE Vernova, revenue has seen an increase of roughly 58% on a year-on-year basis. Margins have also seen very healthy expansion at 26.7% versus 16.7% in Q3 of last year. For SBI Cards, net profit has seen an increase of roughly 45%. Even the revenue has gone up by 11% on a year-on-year basis for this one. For eClerk Services, for their Q3 numbers, net profit has seen an increase of roughly 40% compared on a year-on-year basis. Even the revenue has seen an increase of roughly 25% for this one.
Okay, thank you so much for that, Ria. But let's move on, and the final leg of update, let's go across to Mangalam to tell us about the cues in the world of F&O. Good morning, Mangalam.
Good morning. So it was day one of February series, and it went to the bulls. It was a good day. If you look at the Nifty Bank, both of them up around 2/3%. But your portfolios would feel a lot better after the pain, especially that they felt in the January series. The broader indices, if you look at the mid-cap and the small-cap index, both of them did very well, almost 2% gains for both of those indices, and the advanced decline also told you that there were a fair more number of stocks which were in the green than the number of stocks which were in the red, and that distance was 2300 is to 678 on the red side. And then the flows confirmed that as well. Both the FIs and the DIs ended up buying, so instead of a 3,000-4,000 crore sell that we were used to seeing from the FIs, there was actually a 500 crore purchase. The net inflows in the market was close to around 3,800 crore rupees. And in doing so, the Nifty Bank went ahead and conquered its 50 and the 20-day moving average. So that's a positive because that was the one which was underperforming in the past. But the Nifty, while it crossed the 200-day moving average, the 20 and the 50-day moving averages are still a fair distance away. 20-day moving average for the Nifty is 25,700, 50-day 25,900. Maybe the street will bide some time around current levels for the frontline index ahead of big triggers like the budget, etc., to go ahead for the Nifty and conquer these two important levels as well. And which is exactly the reason why FIs did not buy much in index futures as well. It's early days in the series, remember. So 180 crore is what they bought, 2,200 crore, 2,200 long contracts and about 1,100 short contracts is what they added. And their long exposure, which was 12% at the start of the series, has inched only marginally higher to 13%. Remember, 87% are still on the short side. And not just that, they've also on a day like yesterday written more calls than puts, telling you that maybe there is supply at higher levels. And what could those higher levels be? 25,400 and 25,500 calls. Both of them saw a fair amount of writing. A combined premium on the 25,400 call close to around 200 rupees and around 150 rupees for 25,500. So it tells you that maybe around 25,600 to 25,650 there would be a fair amount of supply that would come by just below the 20-day moving average on the Nifty. But at lower levels, there is a demand. 25,350 put for a premium of 200 rupees tells you that around 25,150 or where the 200-day moving average is there is support. So broad range for the market, 25,150 to 25,650. Fresh shots seen on Hindustan Zinc, and there's additional news on that today as well. And Asian Paints saw a fair amount of sell-off yesterday. Crude prices are higher. Let's see where that one goes.
Okay, thanks so much for that, Mangalam. But let's